How much money can you really make investing in the stock market? Okay, where are you right now? Sitting at your desk, lying on your bed, maybe you're watching this on your phone on the toilet. Look around for a second. Where did all the stuff around you come from? The furniture, the electronics, the food and the books and the toys and the toilet paper. It was all made by a company, right? You probably work for a company too, don't you? Companies drive the global economy. They serve clients, they make the goods and services that we use, and they make the world a richer place. So of course, if you want to get richer, it makes sense to invest in companies. It makes sense to invest in stocks. That's why the stock market is the best wealth creation engine for regular investors. It's incredibly powerful. But just how powerful is it? Just how much money can you actually make by investing in stocks? Hi, I'm Tom Crosshill, and this is the Index Investors channel. I don't have a crystal ball and I can't predict how much money you personally are going to make in the stock market. But what I can do is look back at history. Yes, the future may be different, but the past still has a lot to teach us. So question number one, what was the average profit level in the global stock market over the past 50 years? This is helpful because you as an amateur investor are very unlikely to beat the market average. You are unlikely to outperform professional investors all over the world, right? So in fact, in most cases, your best bet is to copy the market average. You use passive investments like index funds and ETFs and get the market average. So of course, it's useful to know what does the market average look like. Most people online just talk about American stocks, but since I live in Europe, and I think that America is not really the whole world, I'm going to be looking at developed world stocks. This includes not just America, but Western Europe, Japan, Australia, and other developed countries. For developed world stocks, we have over 50 years of data available on the MSCI index provider website, msci.com. By the way, I highly recommend visiting that website and playing with the data available there. It's a really good resource. So if we look at the past 52 years from 1969 to 2022, we see that the average long-term result in developed world stocks was around 9% per year. So if you invested $100 in developed world stocks in 1969, today your investment would be worth over $9,000. Now, if you're a beginning investor, you're probably not sure, is that a little or is that a lot? If you listen to people who want you to trade Forex or buy crypto or whatever, I mean, they will tell you 9% per year? That's nothing, come here and make some real money. But of course, they're actually just trying to sell you gambling where you are likely to lose. The truth is, professional investors, rich people, dynasties, people who know how investing works, they are thrilled to make 9% per year on average. This return doubles your money in 8 years. And even if you go ahead and subtract inflation over the long term, that has a huge impact on your wealth. Now, of course, it's nice to know the average result over 52 years, but there's a problem with that, right? Most likely you're not going to be investing for 52 years. And historically, there were many shorter periods where the results looked very different. It's a little bit like asking what's the average temperature of all the patients in the hospital, including the ones in the morgue. It might be an interesting number, but it's not really that helpful when you're planning your investments. So here we come to our second question. What were the best and worst case scenarios over the past 50 years? Let's see what would have happened with your money if you had invested for just 10 years at random points since 1969. So the absolute worst case scenario would have happened if you invested in late 1999. This was the high point of the dot-com bubble, when the stocks of companies like Yahoo and Pets.com and others were riding at ridiculously expensive levels. And of course, many of these companies later disappeared. As a result, the stock market as a whole was quite expensive. So if you invested in late 1999, you were buying stocks at a really high price. And then if you wanted to sell exactly 10 years later, well, that was 2009, the middle of the financial crisis, when stocks were really, really cheap. So if you bought really expensively and you sold really cheap, well, that was a really bad situation, right? In this worst case scenario, your 10-year return would have been a negative 2.6% per year. Overall, you would have lost around a quarter of your investment over 10 years. So of course you have to kind of realize that this is really a very specific worst case period. If you'd been able to wait for at least a few more months or years, you would have gotten your money back and then you would have made a nice profit. But this one 10-year period was really unfortunate. Now let's look at the best scenario. If you had invested in the market in August 1977, then over the next 10 years until August 1987, you would have made a fantastic average return of 20% per year. There was a great run-up in stock prices over this period, and 1987 was the peak, because in October 1987 you had the infamous Black Monday, one of the worst crashes of the financial markets in world history. So if you managed to time your investments just right and stop immediately before this crash, then you made a fantastic 10-year return. So that's a pretty wide range, right? Between absolute worst and absolute best. The stock market gave you anywhere between minus 2.6% per year to plus 20% per year. So how helpful is it to have such a broad range? Not that helpful, right? Not if you want to plan. So this brings us to our third question. What was a more typical range of results? What kind of result did you get most of the time? Well, before I get to that, let me just recommend you hit that subscribe button, leave a like, and click on the notification bell. Make sure you don't miss any of the other cool investing videos which we post every week. Okay, but back to our third question. What was a more typical range of results in developed world stocks? If we pick a random 10-year period out of the past 50 years, 90% of the time your results would have been between approximately positive 2% per year and positive 17% per year. So 2 to 17% per year. 70% of the time, your results would have been between approximately 5% per year and 15% per year. So 5 to 15% per year. Does that make sense? I think that gives you a much better feeling, a more realistic sense of what kind of results investors actually saw over the past 50 years. Now sure, the long-term average was 9% per year, but getting results somewhere between 5 and 15% per year would have been pretty typical. It would have been nothing surprising. Now back to the big question we asked at the very beginning. How much money can you make in the stock market? Well, the stock market might do better or worse than 9% per year over the next 5 decades. No one really knows. It depends on a lot of factors. But as in the past, in the future we will certainly see better and worse periods in the market. So as you plan your investments, you shouldn't just make one assumption about the expected return. You should model different scenarios. What happens if you make a small 3% or 5% per year? What happens if you make a more typical 7% per year or maybe 10% per year? What happens if you get lucky and make more? Check out different scenarios and prepare yourself both financially and emotionally. This will really help you succeed at investing in the stock market. Does that make sense? If it does, and if you'd like to find out more about how to invest in the stock market effectively, make sure to hit subscribe, like, and the notification bell, because every week in this channel we post interesting videos about investing with a special focus on investing from Europe. Oh, and we also run some pretty cool investing webinars for European investors. You can register for free at go.indexmasterclass.com. So thanks for watching and see you next time.